Hey traders, welcome back to the channel. It is Wednesday, February 11th. Hope you had a good day of trading today. Let's get right into the news. So today's Wall Street session was one of those sessions that tells you everything about the market's split personality right now, because the Dow dropped 66 points to close at 50,121. The S&P 500 was essentially flat at 6,941, and the Nasdaq slipped 0.16% to finish at 23,066. Here's the story. This morning's delayed January jobs report came in absolutely scorching. 130,000 jobs added, more than double the 55,000 that economists expected. The unemployment rate dipped to 4.3%, which beat forecasts. And remember, December was revised down to just 48,000. So we went from a near stall in hiring to a massive comeback in 1 month. This report had been delayed for over a week because of the partial government shutdown that ended February 3rd, so traders have been waiting on this one. Markets initially loved it. The Dow jumped over 300 points at the open, S&P was up nearly 0.7%, and the Nasdaq popped about 1%. But here's the paradox. Good news became bad news by this afternoon. Why? Because a strong labor market means the Fed has even less reason to cut rates. Odds for rate cuts got slashed, and that enthusiasm faded fast. And then by the close, all three indexes were red. The 10-year Treasury held steady at around 4.14%. Here's where it gets really interesting. Underneath the surface, there's a clear winners and losers story playing out. AI infrastructure stocks are thriving. Vertiv absolutely exploded, up 24% after crushing earnings with organic orders up a staggering 252% year over year and a record backlog. Caterpillar, GE, Vernova, and Eaton all rallied as the AI center build-out trade gained momentum. Micron, Texas Instruments, and Lam Research each jumped more than 5%. But on the flip side, software stocks got hammered again. Salesforce dropped nearly 4% today, and the ongoing AI disruption fears continue to weigh on names like Oracle and Palantir, both down over 2%. The software Armageddon theme from last week clearly isn't going away. In earnings, Shopify was a standout, surging 11% after beating on revenue at $3.67 billion and announcing a $2 billion buyback. But not everyone had a good day. Zillow cratered 17% on disappointing Q4 results. Mattel plunged 27% on a sales miss and weak guidance. And T-Mobile sank 5% on weaker than expected subscriber growth. Robinhood slipped after missing revenue estimates at $1.28 billion against the $1.35 billion target, with crypto weakness adding to the pressure. So looking ahead, all eyes shift to tomorrow's January CPI report, which could either confirm or challenge the Fed's cautious stance. And after the bell today, AppLovin reports. This is a stock that rallied 13% heading into these results. So between inflation data and a packed earnings calendar, buckle up. This market is far from done moving this week. So that's it for today. Have a good evening and good luck tomorrow. See you back here tomorrow afternoon. Bye-bye, everybody.